Welcome grade 12s. Yes, you with Ashraf Patel, and accounting as usual. Like we say, business as usual. It's accounting as usual, but what's in it today? Today we're looking at the Debtors Age Analysis. Right, now remember something. We're not talking about the age of the debtor, but rather the age of the debt. Now, let's do this here so that you have a clear indication of what this entire section entails. A business needs to keep control. Now, as part of internal control, where the definition of internal control, we know, is to protect and safeguard the assets of a business. Notice that your debtors would fall under the category of assets, and therefore, one of the mechanisms or one of the control measures that we use would be the debtors age analysis. Now, obviously, you need to keep control of your debtors as they appear in your debtors ledger. The person who's doing your credit controller has the responsibility to monitor a debtor's credit rating before extending any credit to a debtor. Allow me to explain. Obviously, when a person comes to you with the intention of buying on credit, there needs to be proper screening of your debtor to see, is your debtor credit worthy? There needs to be some kind of track record regarding the debtor's ability to pay, and therefore you would find that it is important to do a history, a check on that debtor's credit worthiness, right? Also, it would fall within the ambit of the debtor's clerk. What would be their responsibility? To check that the debtors do not exceed their credit limit, right? We're going to talk about two very important terms with regards to debtors just now. Bear with me. And we are going to ensure that payments are regularly received according to the agreement with them. Now, before we actually continue, I'm going to ask you now to basically look at two concepts. And those are the credit terms and the credit limit. Let me write it here for you. One would be the credit terms, and the second one would be your credit limit. Okay, write down. I'm giving you a minute to write down for me, what do you understand by the credit terms and the credit limit? Go for it. Your minute starts now. All right, grade 12s, let's see what you have written. Remember, when we're talking about the credit terms, what are we referring to? We are referring to the terms in which a debtor has to settle his or her account. In other words, what period are you giving them in order to settle their accounts? For example, generally the norm or the accepted term would be settle your account within 30 days, subjected to maybe a certain percentage of a discount. So those are your credit terms. Then you have your credit limit. Your credit limit specifies the maximum limit a credit, in terms, so let me repeat that. The limit will specify the maximum amount of credit that the debtor is entitled to. For example, if we have AB coming to us as a prospective debtor, we do the screening, we do all of that, we give him a credit terms of settle your accounts within 30 days, subjected to a 5% discount. That's your credit terms. And then you tell AB that your credit limit is 15,000. That means you cannot buy for credit for more than 15,000. So two terms of reference that we're referring to would be the credit terms and the credit limit. Keep that in mind. Okay, now, before an order can be dispatched to a debtor, the debtor's clerk must first approve the credit sale, obviously. The debtor must also verify the balance of the debtor's account and the agreed credit limit allowed for that debtor. Do you see what I'm saying? So, once you approve this, before the order can be dispatched, we check, does the debtor comply with the credit limit? There may be a limit of 10,000 Rand, and the debtor has now purchased for 15,000 Rand. Obviously, that order cannot be processed because the debtor has already reached his or her credit limit. Okay, now, your debtors age analysis is used where a debtor's ledger is broken down into time periods so that it is clear for how long an amount has been outstanding. So definitely you will see when we look at a debtor's age analysis as to the breakup of the debtor's age analysis, it will give you a clear indication of how long the debt is outstanding. Okay. When you are calculating the age analysis, the two important rules to follow are: one, your returns are subtracted from the latest sale, right? So obviously, if a return takes place, then you look at the month, the latest sale. In that month, you would then deduct the return from that amount. Whereas any payments that are made, these are subtracted from the oldest outstanding balance. More about this when we actually look at an actual debtor's age analysis with an example. Right, now, why do we draw up a debtor's age analysis? What's the reason for drawing up a debtor's age analysis? One, to ensure that your debtors honor the agreement of, for example, 30 days. Are your debtors settling their account within the 30 days? Remember we said the terms. What terms are you allowing your debtors? Number two, obviously, if they are not abiding by the credit terms, this means we then have to charge interest on the overdue balances according to the agreement. So certainly you've got built into your agreement that if a debtor does not settle, then a certain penalty would arise. And sometimes we refer to this penalty as using the carrot and the stick method. What do I mean by that? The stick is what we are using here. You punish somebody with a cane. Obviously, you don't literally cane your debtor, but what you do is you punish them for not settling their accounts on time in terms of the agreement, and interest is then charged on the overdue amount. Okay. Also, you have a right to take legal action if your account is not settled within a certain period. Example, more than 90 days. Now, obviously, in terms of the Credit Act in South Africa, we also have to look at the terms and conditions of that Credit Act before we are actually allowing a debtor to buy on credit. So keep that in mind as well. To minimize, we're looking at to minimize the debts to be written off. Obviously, no business wants to write off bad debts because it's a loss. Obviously, you know, at this stage in accounting, you know that bad debts is an expense, right? And if you are debiting bad debts, you are losing money. It's affecting the equity of a business. Obviously, no business wants to incur an expense like bad debts. To ensure liquidity in the business and a proper cash flow. Yes, very important. If your debtors do not settle their accounts on time, it impacts on your cash flow and your liquidity. Keep that in mind. By the same token, grade 12s, remember, when we're talking about liquidity in terms of a business, we are talking about the cash situation within a business. Is the business liquid enough? Therefore, the question arises, when we're talking about liquidity, we're talking about the ability of a business to settle its short-term debts. Keep that in mind. Or the ability of a business to settle its current liabilities. Now, surely, if your debtors are not paying you on time, it means, therefore, that you may be in a compromised position where you may not be able to settle your current liabilities. Clear, right? To be aware of debtors who honor their credit agreements and those who do not. Yes, your debtors age analysis will give you a clear indication of which debtors are honoring their agreements and those who are not honoring their agreements. And then, yes, to be able to follow up on those debtors who signed a payment plan due to previous late payments. So obviously, once a debtor defaults, then you obviously have to follow a procedure where you draw up payment plans, etc., etc. All of these fall within the ambit of internal control. And once again, the purpose of internal control here is to safeguard the asset of a business. Which asset are we referring to? The asset debtors. To also follow up on possible errors that could be on a debtor statement where the debtor only paid the correct amount without letting the business know of the error. Obviously, these are all information that you can glean from the process of internal control. Another important point regarding internal control. What do we want to know? The sooner a business acts on recovering an outstanding amount, the better the chances of recovering the money. Guys, very, very important. Obviously, you will notice the older the debt, the more difficult it becomes to recover that debt. So keep in mind that part of internal control is to ensure that we are able to sort out a debtor's outstanding debt as soon as possible. The business should negotiate a payment plan and not simply write off the debt as irrecoverable. An important point here, very often, due to the nature of our activities in classrooms, in a classroom situation, you think it's just easy. Write off the account of B cheat as irrecoverable. No, guys, it's not as easy as that. Every effort must be made to recover that debt. Eventually, when we reach a stalemate, when we reach a stage of no return, then only senior management decides to write off the debt as irrecoverable. So it's not a procedure of the account is outstanding, write it off as irrecoverable. No, guys, please understand that within the context of a debtors age analysis and part of your internal control measures. The reason for a debtor's delay in payment must be investigated, and the debtor should provide a plan of action to resolve the payment of an account. Yes, so you are basically part of debt counseling is to make your debtors, to bring them on board, to ensure that you negotiate with them, to ensure that a payment, some kind of plan of action is drawn up. An immediate payment must be requested according to the agreed payment plan, and the repayment of the rest of the debt must be put into place. So clearly what we are saying here is that once you have a debtors age analysis drawn up, all of these measures can be put into place. So obviously, what you have seen from what we have discussed so far is that the purpose of a debtors age analysis is to ensure control over our debtors. Right, you want to see what an actual question on age analysis looks like? The place to be is with us. Take a quick break, have a quick breather, see you in a jiffy. Welcome back, grade 12s. Yes, the question that we promised. We said, the owner of Petronella Traders, Gladys, approached you for assistance with managing her outstanding debtors. Right, okay. The information that you are provided with is the following. You are given a debtors age analysis. Do you see what it looks like? Right? Okay, so clearly you can see the name of your debtor, right? The balance on the debtor's account, what is current, right? What's between 61 and 90 days, and what is between 91 and 120 days. What are the questions? Let's look at the questions based on the information. Here goes. Name the debtor or debtors whose account is or are, obviously, there may be more than one, not overdue. Not overdue. Let's check it out. Okay, now watch this here. Your debtors are required to pay you within 60 days. What do we refer to this as? The terms. The credit terms. Now, if you look at the only debtor, remember we want to find out which debtor is not overdue. Looking at the information, you can see that if you look at KPLA, you find that the balance is 3,270 and the current debt is 3,270 and nothing beyond that. So clearly, the only debtor whose account is not overdue, because if we look at our other debtors, can we see we got information in the 61 to 90 days and the 91 to 120 days. So the only debtor whose account is not overdue is KPLA. So the answer to that one would be KPLA, right? Next question. The question says, calculate the percentage of the amount owed by debtors that is above the credit period allowed. Okay, let's go back. Clearly you can see that the amount that is overdue for 61 to 90 days is an amount of 1,520 plus 980. So immediately we say fine. Let's take that amount. It's 1,520 plus the 980, okay? Giving me an amount of 2,500. And there's an amount of 750 plus 2,150. So let's add that, plus 750 plus 2,150, and the total amount outstanding is 5,400. Okay, now The 5,400 would be the total amount that is above the credit period allowed, 5,400. Remember, we calculated it. Okay, so let's take the 5,400 over, now let's go back. What is the total amount of my debt that is outstanding? Let's add it up. That amount would be 3,270 plus 4,420 plus 2,160. Can you see what I'm doing? I'm adding the total balances of my outstanding debtors plus 2,150, 2,150 to give me a total of 12,000 Rand. So this total here is 12,000 Rand. What does it represent? It represents my total debt that is outstanding. Okay, so now 5,400 over 12,000, express it as a percentage times 100 over 1, and so we say 5,400 times 100 divided by 12,000, and my answer would be 45%. So clearly you can see that 45% of your debt is beyond the terms that you have allowed to your debtors. It means 45% is not, that percentage of your debt is not in compliance with what you are expecting your debtors to pay you. Right, let's look at the next question. The next question says, suggest 3 control measures that debtors can implement to improve the collection from the debtors. Right, you got a minute to answer this question for me. Go for it. Well, guys, let's see. What did you have? Let's check. It said 3 control measures that debtors can implement to improve the collection from debtors. 1, if you look at her collection her terms, we said it is 60 days. Generally, the accepted credit terms would be 30 days. So maybe one of the reasons that they are not paying is because they're given too much time to pay. So reduce that to the acceptable 30-day period. Right, that's 1. Another one, what can you think of? 2, what about, remember we said, the carrot and the stick method? Charge interest on overdue accounts. That's right. So if the account is overdue, you can charge interest on the overdue accounts. That would be the stick method. What about the carrot method? The carrot method would mean you offer incentives. Like what? Like discounts to your debtors to encourage them to settle their account within the specified period. What else can you do? Make sure that regular statements are sent out to your debtors, informing them of their debt, thus encouraging them to settle the debts timeously. Okay? What else can you do? Now remember, obviously, your bad debts is something that you use as a last resort. Obviously, you make every effort to collect the money that is due to you. If all else fails, then obviously you have no option but to write off the account as irrecoverable. Okay, there are many more reasons that you can think of. Check them up, check our solutions, and you'll find many more reasons how you can improve the collection from your debtors. Okay, we're going on to the next question. The question says, study information 1 and 2 below, then answer the following questions. The first question says, does Kuneni Traders have effective control over their debtors? Explain by quoting figures to motivate your answer. Right, we're going to give you the information. There's the information that you have, right? You're going to study it, and you're going to come back to us after a minute and tell us what would be your response to this question. Go for it, guys. Welcome back, grade 12s. Right, what do we have here? Notice that in this particular question, your credit terms would be 30 days. So this is your cutoff point. Right, now ask yourself the question. Looking at your debtors age analysis, what portion of your debt is beyond that period? Okay, so immediately we say, fine, let's do that. The amount would be 72,600. Can you see where I'm getting that information from? Plus your 54,900 to give you a total of 127,500. Okay, now, if we take the 127,500 and if you recall from the previous question, we take it over what? Over the total debt. In this case here, the total debt was 187,500. So, over 187,500 times 100 over 1. Let's do that calculation. So we got the 127,500 times 100 divided by 87,500, and you are left with an answer of, did we do something wrong? Yes, we did. Let's do it again. It's 127,500 times 100 divided by 187,500, and there's your answer, 68%. What does this indicate to you? Clearly you can see that. Now, just another reminder here. something very important. Explain by quoting figures to motivate your answer. You can't just, yes, the answer is no. There's no effective control on your debtors. And where's the proof to that? You, as a candidate, when the question says, quote figures, use figures from your question. And that's where you're going to earn your marks. Because the no may carry 1 mark, but the answer in which you are proving that there's no control, effective control over debtors, the 68% tells you that 68% of your debtors are not complying with the credit terms. Okay? Then the next question said, state 2 actions that the company can take in order to collect the outstanding debts from debtors quicker. We've discussed something similar to this one here. What are they? Yes, obviously, charging interest on overdue accounts. Right? What else can you do? Maybe have an SMS system in place where you inform debtors of the outstanding debts. So in this case here, they informed via the electronic media as well. Obviously, the sending out of statements. The question asks for 2. We're just discussing a few more actions that you can take. Remember, give discounts for prompt settlement. In this way, you can encourage your debtors to settle their accounts timeously. Now, clearly you can see from the questions that we are doing that the interpretation of the Debtors Age Analysis is of utmost importance for examination purposes. And also, other than exams, remember, it's a life skill. So when you receive a statement one day and you look at your Debtors Age Analysis, you for yourself can see what are you settling your accounts on time. Remember, guys, accounting is and always will be a life skill. Stay with us. We'll be back just now. Welcome back, grade 12s. Yes, remember, we're dealing with the Debtors Age Analysis. However, an interesting question for you here. Let's see how much you remember from our previous lesson. And the question says, explain why the debtor's control account balance should agree with the debtor's list total. Go for it. You have 1 minute to give me a response. Okay, grade 12s, what was your response? Remember that the debtor's control account, as we know it, as we've discussed it, is a summary of your debtors list. Watch what I'm doing for you graphically now. Whatever you've done to your debtors control account in total, you've done individually for each debtor. Therefore, the debtors control account, I repeat, is a summary of your debtors list. Therefore, it is obvious that whatever entries you've processed in the debtors control account has to be processed individually in every debtor's account, and therefore these two balances, that of the debtors control account and the total of your debtors list, should always be in agreement. Clear? Right. Remembering at all times that when these two do not agree, then it becomes necessary to draw up a debtor's reconciliation statement whereby you reconcile your debtors control account balance with your debtors list. Okay, let's go back. And the question now says, briefly explain how the preparation of a debtor's age analysis can assist the business in controlling their debtors. Go for it, guys. Based on what we've done in today's earlier segments, think now. How will the preparation of a debtor's age analysis assist me in controlling my debtors? Use the information and the lessons that we did in the earlier segments to answer that question. Go for it. 1 minute. Right, guys? What were we doing in the lesson so far? Briefly explain how the preparation of a debtor's age analysis can assist the business in controlling their debtors. Definitely, what can be done? We will be able to identify those debtors that are not complying with the credit terms, those that are not settling their accounts, and obviously, one is to identify them. So, in our response, we're going to say that we're going to identify debtors that are not complying. Okay? So we're going to identify basically your problem debtors. Okay? And once you've identified your problem debtors, what are you going to do about it? Definitely, corrective action is going to be taken. For example, those that are not paying their accounts on time, maybe suspend their accounts. The second thing that the debtor's age analysis will help us in identifying, maybe there's a debt that we are carrying for longer than 90 days, maybe 120 days. Obviously, after all possible measures have been put into place to try and recoup the money that belongs to us, certainly, if that cannot be done, and obviously, once you've taken legal action, obviously it comes at a price. You reach a stage where it's now no longer viable for you to continue trying to recover, then only do you write off the debt as irrecoverable. So the debtor's age analysis would also give you an indication of the amount of bad debts that you may have to write off. Okay? So there's a whole lot of things based on what we've done so far, how you can answer a question of this nature. Most important, it allows you to take corrective action, and it allows you to take some kind of action against debtors that are not complying with the credit terms as well as the credit limit. Okay, so now let's look at the next question. Here's my information in terms of the debtors age analysis. I want you to study the debtors age analysis and tell me from this age analysis, what are key points that you would like to highlight? And the question actually says, let's see what the question says. It says, provide Theo with 4 points to confirm his suspicion. He's not totally satisfied with the new credit controller. You now have to provide evidence based on the information that you have here in terms of your debtors age analysis to verify whether that is actually the case or not. So remember, your debtors are granted a limit of 15,000 Rand and they are granted 30 days in order to settle their accounts. Go for it. Here's the debtors age analysis. Right, let's keep it there for you. Mention 2 points from this debtors age analysis that you would explain. Go for it. Your minute starts now. Okay, guys, clearly you can see Horton. What's the story with Horton? Number one, Horton owes a total of 28,300. Clear? All debtors are granted a credit limit of 15,000 Rand. Definitely, there is a problem with the appointment of this credit controller. Why? Because Horton was allowed or had a credit limit of 15,000 Rand. At the moment, Horton owes us an amount of 28,300, clearly well above the credit limit. Clear? What else? It's business policy that debtors are granted 30 days to settle their accounts. Look at Horton. What can you see? Immediately, you find that there are amounts more than 30 days that are outstanding. There's an amount for 60 days and there's an amount for 60 days plus. So obviously, with regards to Horton, you can see that that is definitely a problem debtor. And yes, the credit controller is definitely not as effective as we would like him or her to be. What about Mooney? Yes, again, credit limit is fine, but look at the days. Immediately you can see already there's a problem there because that's moving on to 60 days. Right, now we want you to look at the debtors control account, and looking at the debtors control account, also identify from here 2 problems that would make sure, or two. Let's rather state it this way: 2 problems here that would tell you that the credit controller is in fact not doing his or her job. Go for it. Your minute starts now. Welcome back, grade 12s. Yes, looking at this debtors control account. If I draw your attention to this bank figure here, clearly you can see that that bank figure refers to your RD checks. Okay, now, again, if my RD checks are totaling 10,800 of an amount of 55,700, look at the comparison between that and that. Clearly you can see that a large percentage of your checks are coming back that you are receiving from your debtors are coming back from the bank marked RD, referred to drawer. That means these are unpaid checks. Look at your bad debts. Again, based on what we spoke earlier, you don't just write off the accounts as bad, but you make every effort to recoup that money. Look at your debtors' allowances, also as a proportion of your sales. So all of these factors clearly indicate that the credit controller is ineffective in doing his or her job. We need to make sure that we're not faced with a position where we have to write off bad debts. Obviously, it's inevitable, it's going to happen, but these need to be limited. So all of these would definitely point in the direction of what we can say, what we were referring to as whether the appointment of the new credit controller was the right decision or not. Clearly, from the information that we have, it was not a wise decision, and therefore maybe retrain the credit controller or move him or her to a new department, but make sure that your debtors are controlled effectively. Well, guys, if I'm looking at the horizon and I see those stars in the sky, surely it reminds me of the accounting boffins out there. Yes, you are our accounting stars. Until the next time, be good. Goodbye.